So let's say you have the opportunity to buy a investment in an area where the market value is about $100,000. $100,000 property in this hypothetical market is a livable, rentable, nice home, something that someone could move into, hang their clothes up in the closets, and just be there. And how do you get to that $100,000 value when you're looking at that market? You've got to find an investment that is way less than $100,000. You want to have all in between $75,000 and $80,000 of investment into that after repair value of being $100,000. That doesn't mean go buy an $80,000 or a $70,000 property and then hope that it's worth $100,000 later. The way to operate that hard money loan is typically to find something well below that, usually something majorly distressed, something in the $30,000 to $40,000 range that has a renovation cost between what you have in it and up to that 75%. So if you're buying a $40,000 property that you can put $35,000 of renovations in, so you have a total of $75,000 invested in that property, but the after renovation value is worth $100,000. That is a perfect targeted deal for hard money.